Hi there, this is Kevin Cameron coming to you with a new round of PPP loan tune-ups. We did these last summer and we stopped them as the PPP process started to slow down into the fall. And now we're back up and running them again, primarily for the PPP round 1 forgiveness process and also for PPP round 2. We all know by now that we are in the second draw loan phase, where businesses can qualify for a PPP round 2 or second draw loan. So today we're going to talk a little bit about round 2 and where it's at, and then we're going to also go into some separating fact from fiction on some of the questions that we've already received from borrowers and some lenders. Actually, I spoke to 2 lenders today. I'll give you some insight into what I got from them as well. Hopefully you know by now that version 2.0 of the PPP expense tracker and loan forgiveness calculator has been published. The beauty of this is that it is good for both the PPP round 1 and it's also good for PPP round 2. So it's all inclusive. You can use it twice essentially. If you're using an older version of the PPP forgiveness calculator, there's nothing really wrong with that. The current version does have the expansion for the additional qualified expenses that the new law allows us to take. There's 4 categories there. I'll go into that a little more in next week's tune-up video, but for this week, we're gonna stick to the topic we've got. You can still get the PPP expense tracker and forgiveness calculator at www.pppexcel.com. That website and that link is still good. So let's talk for a few minutes about PPP second draw loans and kind of give you an update at where we're at. So the big distinction between the second draw and the first draw has to do with who qualifies. That's probably the most important thing to keep in mind here. And so one of the things that I wanted to share with you is just some basic information that's coming directly from the SBA's website. These are all PDFs that you can download from the SBA. The PowerPoint slides that are provided with this webinar have links in those, so you can directly click on that link and go to the SBA's website for this information. This is all publicly available. It's great information. I think the SBA is doing a little bit better job with the second draw loan at providing guidance because they've been through this once before, obviously. So on their website, they've got some basic information on what the terms are, the eligibility, the maximum loan, how and when to apply, and there's some comments about ensuring access for all. So that's one thing that you could read. It's a 1-page read, so it's fairly easy. We know that the loans became available or the program resumed on January 11th. The SBA began accepting applications on the 13th. I spoke to a banker today that told me that their bank had processed 1,500 applications already. So it does look like that we're in the second wave, if you will, of applications. It doesn't seem to be quite so frenetic as it was in the first round. If you guys applied early, you can remember that was pretty much a very crazy week to 10 days that we went through when those the first round loans were established and provided. The SBA also published on January 19th, which a lot of people aren't aware of, some guidance on how to calculate the revenue decline, because in the PPP second draw program, you've got to show that you've had a revenue decline of more than 25% or more in any one quarter in 2020 compared to the same quarter of 2019, or for all of 2020 compared to 2019. And I'll go into this a little bit more in a future slide that we have this morning. But for right now, I just wanted to show you that the SBA did issue some guidance on this on January 19th. It's 18 pages of guidance, so it's kind of exhaustive, but it might be smart for you to print this out, particularly if you're in a business where you're kind of on the fence as far as qualifying or not. This gives us some good guidance. The definition for the decline, they keep referring to gross receipts, and now you see in this guidance, they're actually starting to refer to gross receipts as revenue. which makes a little more sense for us business owners. So I would suggest you download and review that PDF because it's got some really good information in it on measuring the revenue decline. And it also gives you guidance on what documentation to provide for that. So that's good to have. And then the last PDF I'm going to share with you, which also has a link in the PowerPoint slide deck, is the Paycheck Protection Program second draw borrower application form. It's very similar to the first application in that it's requiring or requesting all of the same data, if you will. So we'll be able to go over that as well. It's pretty straightforward. It asks some questions, and your banker will probably have this on a web portal. You won't necessarily fill out a paper form. I know in round draw one, there was some banks that would accept paper applications, but I think this second draw, you'll see most people are probably going to be wanting or most banks are going to be wanting the application done on a portal or electronically. So we're going to get into kind of 10 different topics, if you will, that we're going to cover today. We are going to try to keep these tune-ups to about 30 minutes. They are going to be posted on YouTube, so you can always go back and watch them again and again. There are also links on our website for them to go to if you'd like to. They're informational. Use them as guidance. Hopefully it'll help, and hopefully it'll help you with both your first round and your second round. One of the questions that I've received from people in the last 2 weeks have been, I can't apply for the second round loan because I haven't submitted my application for the forgiveness for the first round or the original PPP loan, so I can't apply for round two. That's not true. You can apply in the second round, and surely probably thousands and thousands of small businesses have applied for the second round without submitting their application for the first round. And that's probably for a good reason. It could be that they just haven't gotten around to it, or it could be that when this law was signed on December 27th of 2020, it really did rock our world a little bit in that it freed up the employer retention or the employee retention credit to be allowed to businesses that also applied for the PPP round one loan. Sorry about that. So in those circumstances, you might need to stop and look at your payroll data for 2020 to see if your employer retention credit is available to you for certain wages that you might have otherwise used for the PPP loan forgiveness. Because one of the rules that they have set for us is that you must apply those wages first to the employee retention credit and then to the PPP loan forgiveness, unless you elect to apply those to the PPP loan forgiveness first. I'm not sure how that election is going to work. We haven't been told that yet. We'll keep our eyes and ears open for that. But the fact of the matter is let's say that you were a restaurant that was ordered to be closed for, say, a 1 month period from mid-April to mid-May in 2020. You would probably qualify for the employee retention credit for wages that you pay to your employees during that time frame, depending on how many full-time equivalent employees you have. And so in that circumstance, you would not want to use that payroll for your PPP forgiveness. So it's going to make us all take a step back and take a look at our payroll data, whether or not we qualify for the ERC. And if we do, then we're going to have to go and calculate that employee retention credit, go to the IRS and request a refund for that credit for 2020, then go back and work on our PPP loan forgiveness. So that's going to be something I'm actually going to address in next week's tune-up at a little bit at length. I will go through a actual case study that we're working on right now with real numbers, and so we'll show you how those numbers are going to work and why you're going to need to take that little extra step. So for a lot of people, that's keeping them from applying for the PPP loan forgiveness in the round two. this is another question we've gotten a lot of information on. Since I qualified for the original PPP loan, I automatically qualify for round two. By now, we pretty much should all know that's not true. Round two does require you to actually meet a threshold to apply. Now, that threshold's moved around on us a little bit. Last summer, when they were talking about a PPP round two, the revenue decline at that point needed to be 50% or more. Then there was some discussion about 33% or more. Well, the final version of the law came in at 25% or more, which is actually very generous. And it's only for any one quarter in 2020 as compared to any one quarter in 2019, or for all of 2020 compared to all of 2019. And that latter requirement or stipulation, if you will, was really designed by the SBA to make it a little bit easier for a small business that might not necessarily calculate their revenue on a quarterly basis, but most certainly probably calculates it on an annual basis. So if you're a small business and your revenue was $250,000 in 2019 and it's now $150,000 in 2020, you clearly have a 25% reduction, and you would qualify, and you don't have to show any quarterly data. You could show your annual data. So that makes our lives a little bit easier. Now, the interesting thing about this is, what if your revenue was down 25% or more for, say, quarter two 2020 compared to quarter one 20 or quarter two 2019, but then your revenue was actually up in quarter three of 2020 and in quarter four of 2020, or either quarter? The rules right now are that you still qualify because you have at least one quarter that shows at least a 25% or more drop in revenue. And we've actually seen small businesses that had an increase, a net increase in their revenue for 2020 over the year 2019, and yet they still qualify. I think it's just an anomaly that maybe wasn't intended by or contemplated by Congress or the SBA when they developed the rules for round two, but these are the rules that we're living within. And so if you qualify and you feel like you could use a PPP second draw loan to help you in your business, then by all means you should apply. Don't forget that the necessity requirement technically is still there, and you should make sure that you really need the money in your business. Another question I've received from a lot of people this week and last week is that I don't know my gross revenue yet. I just haven't done the accounting yet for 2020 to compare it to 2019, so therefore I can't apply. And that's kind of true and not true. That's why we have both fact and fiction here on this slide. Because if your PPP loan is over $150,000, then you have to provide proof of your decline in gross receipts with your lender to apply for the loan. So far, what it looks like the lenders are asking for is a profit and loss statement for the same period of 2020 to 2019. And they're not really auditing it or anything. They just need to have some documentation that shows a decline. I'm sure there's going to be some look back on that at some point in the future. But if your loan is $150,000 or less, for some reason the SBA is not requiring these borrowers to actually submit the proof of the decline in gross receipts yet. You have to provide that to the lender on or before you apply for forgiveness for the second round loan. I think they did this because they wanted to expedite the money to these small businesses. They don't have necessarily the time to do the accounting necessary to get the loan. But what we have seen, I saw this as recent as yesterday, that some lenders are still requesting that data or that backup to prove the 25% or more decline on their portals or their loan application websites. So I'm not quite sure how it'll work for a small business who can't provide the proof and their loan is under $150,000, how they'll get any further with the lender. You might have to call your lender and see if there's a workaround for that, or if maybe you need to even try a different lender that's willing to accept the application without that backup at the date of the application. One other thing that we're getting a lot of people asking us questions on is If my payroll costs for 2019 were higher than my payroll costs for 2020, which it certainly was for a lot of businesses in 2020, because a lot of businesses did still cut back on their payroll, even with PPP funds, that those businesses can technically use the 2019 payroll to get the second draw loan. So they can use the higher payroll for 2019 versus 2020, which would have been a lower payroll. And the SBA is telling us you can do this. You can actually use your 2019 calendar year payroll, your 2020 calendar year payroll, or the precise 1 year period before the date on which your loan is made. Well, since a lot of people are applying in January, that would technically be calendar year 2020. I suppose if you apply in February of 2021, then you could possibly use February 20 to January 2021 for your payroll calculation. Not sure that's really necessary unless you have a higher payroll for that 12-month period. So that's one thing that's really confusing a lot of people is they're actually letting you use your original 2019 payroll data, which is very interesting. The next question that we came up here is that if I use my 2019 payroll costs, my loan will be the same as the original loan I got. Now, assuming your original loan was based on your 2019 payroll, and now your second loan is based on your 2019 payroll, the answer to that question would be yes. I have seen already this last week where the first round loan was actually based on incorrect payroll data, because if you remember early on, we were all in a big rush to get information into the lenders, and maybe some of that wasn't exactly correct. It wasn't necessarily intentional, but it might have been a mistake on the part of the borrower. And so you do have to be a little bit careful that go back and recheck your 2019 payroll data that you supplied to the lender and make sure that it's still accurate, but otherwise you are allowed to do that. Now the loan will be the same for most borrowers, but if you're in the hospitality, food service industry, any businesses that have a NAICS code beginning with a 7.2, your loan this time around is going to be higher because you're allowed to use 3.5 times your average monthly payroll cost as opposed to 2.5 times your monthly payroll cost. That effectively increases your loan by 40%. So that's really good news for our restaurants and our bars and our hotels, any facilities like that where you have that code for your business code. Now, I've been asked by a few people that maybe they were previously using the incorrect code on their tax return. I think that if that is the case, you should rely on what the facts and circumstances are, what your specific industry should be. Obviously, you'd want to correct it going forward, but it's pretty straightforward as to whether or not you'd fall into that category or not. The documentation to substantiate the payroll costs is generally the same as the documentation required for the original PPP loan, and that's correct. The SBA hasn't changed what they're looking for as far as the documentation is concerned. I just, right before I taped this webinar, supplied a year's worth of payroll data to a client of ours that is going for the second draw loan. Their same bank that they used before. The data they asked for was exactly the same. Now, they're using their 2020 payroll data because their 2020 payroll was actually higher, substantially higher than their 2019 payroll. So again, that's something that you're going to want to take a look at. The other question that we keep getting a lot of questions on from borrowers or prospective borrowers is that the SBA has changed up the terms on the PPP second draw loans, and they have not. The second draw loan terms are exactly the same as the first draw, if you want to call it first draw loan. So in other words, the loan is 100% guaranteed by the SBA. There is no collateral required for the loan. There is no personal guarantee provided with the loan. The interest rate is still 1%, and the term on the loan is still a 5-year maturity. So I've had a lot of people ask me, well, this one's not forgivable, right? And the answer is no. PPP second draw is forgivable on pretty much the same terms and requirements and qualifications as the first draw loan. So there's a lot of confusion as to why the SBA did this, but we all know that it was just part of this next round of stimulus spending that Congress has passed. Another question I'm getting a lot from self-employed individuals, particularly self-employed individuals whose income was greatly reduced last year. So for example, I'm working with an individual in Orlando, Florida, that a small business owner, one-person business, had a decent Schedule C for 2019. Their Schedule C for 2020 is about 20% of what their 2019 Schedule C was. Do they qualify for the PPP round 2? Absolutely. Do they get to use their 2019 or their 2020 Schedule C to apply for the loan? They can use either. Obviously, the Schedule C for 2019 is the one to use because it produces a much higher loan. It's exactly the same loan as last time. So this particular individual is getting about a $7,000 loan. They got it the first time, they're getting it again this time. Exact same circumstances. So if you are self-employed and you qualify for the second draw loan, I strongly encourage you to go ahead and apply for that loan sooner than later. The last day that you can apply for the PPP second draw loan is March 31st, 2021. That's the cutoff date that the SBA has set right now for this second draw. I doubt that the money will last that long, and that's why that is a correct date. But if you're thinking about applying or you're waiting for your numbers to come in for 2020 to see if you qualify, be careful with that, because you're going to want to make sure that you don't the fund doesn't run out, because remember that this is funded with specific amount of money. It's quite a bit of money, but it is funded, and if the funding runs out prior to March 31st, the SBA will have to extend it only if they can with Congress's approval, or they will stop the program. So if you think you qualify, go ahead and get into the queue and get that application in sooner than later. The other thing that's popped up a lot here is if I do not use all of the round 2 proceeds for unqualified expenses, I will not get full forgiveness on my first round loan. A lot of people are concerned that there's going to be some kind of tie-in between the second and the first draw loans with respect to forgiveness. And based on how we interpret the rules right now is that loan number 1 and second draw loan are independent of each other. So if you get 100% forgiveness on the first loan, but you don't on the second loan, it doesn't affect the first loan, and technically vice versa. So don't be overly concerned about whether or not you will or will not qualify for full forgiveness. Now, I've spoken to a lot of borrowers who have really scaled back on their payroll substantially. Businesses that have cut back on their workforce by 40 or 50 or even 60%. Now, if they apply for the second draw loan using their 2019 payroll data, they could very well borrow more money than they could even spend on payroll in that 24-week period. Remember, we have that covered period that can go as far as 24 weeks. It's between 8 and 24 weeks. 24 weeks is nearly 6 months. So if you're in a circumstance where your loan amount may be so high that you can't spend it all within that 24-week period, you might not get full forgiveness. I've only seen a couple of examples where that really applies, but if that's for you, the worst case scenario is that you might have to pay back some of the PPP loan if you don't use it all up on qualified expenses in that very generous covered period that we now have. Remember, the loan is still based on 2.5 times your monthly average payroll cost for most businesses, 3.5 times for businesses in the industry that the NAICS code starts with a 7.2. But for the most part, 2.5 times your monthly cost still is only about 10 weeks, right? So if you've got 26 weeks to spend the money, you might still be okay. That's it for today's tune-up. We are going to come to you again on a weekly basis going forward. These will likely be aired on Saturdays, but like I said, they will be on YouTube as well as our website, so you can certainly find them. I got my email address on here. If you have questions, I will certainly try to help you as much as I can. Keep in mind that some days I get several hundred emails that are PPP emails alone, so it might take me a day or two to respond. But otherwise, I want to thank you very much for tuning in, and you guys keep up the good work, and let's hope that we can get through this second draw loan program a little more smoothly than we did on the first draw program. Thank you.